Hi guys, this is CA Balakrishna from Lecturepedia.in. Now in this class we will be revising professional ethics. Okay. Now before entering into this professional ethics, first of all we will discuss what will be covered under this professional ethics chapter. Okay. Basically there will be 4 topics that we will be dealing in this professional ethics chapter. Okay. The first topic is related to code of ethics. Okay, an overview of code of ethics. Second topic is related to CA Act, our Chartered Accountants Act 1949. Third part would be the general guidelines that are issued by our council, and the fourth part would be self-regulatory measures which are recommendatory in nature. Okay. We can divide this entire professional ethics into these 4 parts. We will discuss each of them one by one. First of all, we will be covering this code of ethics. See, first of all, we will understand what is meant by code of ethics. If you remember, in paper 4 law, we have read a particular act by name Insolvency Bankruptcy Code. Okay. There what we have discussed, code means collection of various acts. Okay, the provisions relating to a particular matter which are present under various laws will be combined together and a code will be framed. Their insolvency bankruptcy code will be dealing with provisions related to insolvency. Here code of ethics deals with professional ethics for chartered accountants. Okay, now the provisions related to professional ethics of chartered accountants are present in various parts. Okay, they are discussed in our Chartered Accountants Act. They are discussed in the form of guidelines of the council. Okay, like this the provisions related to ethics for chartered accountants are present in various areas. All those provisions are brought together and a code by name code of ethics is issued. Basically this code of ethics contains 3 volumes. Okay, you can find these 3 volumes in our ICI website. If you search for code of ethics, you can find 3 volumes under this code of ethics. However, all these 3 volumes are not applicable for our CA final level. Okay, there are only certain aspects from this code of ethics that are given to us that we will be learning. Okay, now basically see, here you can understand the term itself says overview of code of ethics. We will not be learning entire code of ethics here. We will be just seeing an overview of code of ethics. But however, in this code of ethics there are schedules that are present. Basically these schedules are given in Chartered Accountants Act, and since this code of ethics is a collection of all the provisions which are present in various areas, therefore this code of ethics will also contain the schedules relating to our Chartered Accountants Act. Thereby we will be just seeing an overview of code of ethics here. Basically this I said that there will be 3 volumes under this code of ethics. Now the overview of code of ethics will be covered under first volume. Okay, but here we will not be learning in the form of volumes, we will be just learning in the form of content. Okay, some of the content from code of ethics is given here. Now this overview of code of ethics can be divided into 4 parts. Okay, the first part would be complying with code, fundamental principles and conceptual framework. We will be reading these 2, fundamental principles and conceptual framework, from overview of code of ethics here. Okay, we will not be discussing this. The second part contains professional accountants in service, and third part contains provisions relating to professional accountants in practice. These parts will not be discussing here in CA final. and there is some independence standards which are prescribed in the first volume of Code of Ethics. Even those will not be covering here. We will be just dealing with fundamental principles and conceptual framework from this overview of Code of Ethics here in CA final level. Okay, now starting with fundamental principles. Basically there are 5 fundamental principles which you already know. What are the 5 fundamental principles? First one, integrity. Integrity means being honest. Okay, auditor should have quality of honesty. That means, let's say the financial statements are materially misstated. In that case, he should honestly give the opinion of a modified opinion. Okay, he should not give a clean opinion. That is the quality of being honest, or quality of having integrity. Okay, the first quality or the fundamental principle that has to be followed by the auditor is integrity. Next one, objectivity. Basically this objectivity is related to decision making. This means the auditor has to make decisions based on facts. Okay, the decisions of the auditor must be objective in nature. They should not be subjective decisions. Okay, the decisions of the auditor should not be biased in nature. Okay, they should be based on the facts. That is the second fundamental principle that has to be followed by the auditor, or a chartered accountant in practice, you can say. Next, professional competence and due care. That means whatever the work that a chartered accountant is doing, he must have the technical knowledge relating to that work. He should be professionally competent to do that work. Okay, that is the third principle. Fourth principle, confidentiality. As you all know, the auditor should maintain confidentiality, but there are 3 exceptions relating to this confidentiality. What are they? That means generally auditor should not disclose the information of the client to third party, but there are 3 exceptions. In these 3 exceptions he can disclose. What are they? First one, required by law. Let's say in the court there is a certain proceedings going on against the client. Now court asks auditor to present or to disclose certain information related to client. Okay, here in this case, since the information is required by law, okay, required by court of law, it is covered under exception. The auditor can provide such information since it is required by law. Next, permitted by law and authorized by the client. Okay, by taking prior approval or prior permission of the client, auditor can disclose the information of the client to third party. Next, professional duty or right to disclose. Here the best example would be peer review. Okay, a chartered accountant firm has to conduct a peer review. There are certain timelines which are prescribed by our ICAI. During those timelines the peer review has to be conducted. Now during this peer review there is a professional duty to disclose the information that is collected during the audit to the respective peer reviewer. Okay, these are the 3 situations in which these are the 3 exceptions to the principle of confidentiality. Okay, that is the 4th principle. 5th principle is professional behavior. Auditor should maintain a professional behavior. These are the 5 fundamental principles that the auditor must possess. Now there is a chance that auditor might not comply with these 5 fundamental principles. Okay, the chance that the auditor might not comply with these 5 fundamental principles are the threats. Okay, there are 5 types of threats. See, threats to compliance with fundamental principles. What are the threats that the auditor faces in complying with these fundamental principles? There are 5 threats. First one, self-interest threat. That means auditor has, let's say, given some loan to the client, or auditor's relatives have invested in the client. In this case, auditor becomes interested in the client, thereby he might not give opinions independently, or his decisions might not be objective in nature if he is having self-interest in the client. That would be self-interest threat. Next, self-review threat. Let's say auditor has implemented internal controls. Okay, basically auditor has designed internal controls for the entity. Okay, now auditor himself during statutory audit verifying these internal controls which are designed and implemented by him. This would be self-review threat. That means reviewing the work which has been performed by himself. Okay, if he reviews the work which has been performed by himself, then there is a chance that he will not identify mistakes. Okay, even though he identifies mistakes, he will not disclose them because the work is performed by himself only. That would be self-review threat. Next, advocacy threat. Let's say client has issued some shares. Okay, it has listed on a stock market, it has come for IPO, and during this IPO it has issued the shares. Now auditor of the client has recommended to various investors, encouraged various investors to purchase shares of the client, saying that the business of this client is very good. Okay, it is very profitable business. Like this, he advocated the client and he encouraged various investors to purchase shares of this client. Now, based on the recommendations of the auditor, various investors have invested in the shares of this client. Now later on, while giving the audit opinion, if auditor finds any misstatements or any frauds in the company, then he will not be in a position to give qualified opinion, because here he has encouraged various investors, he recommended various investors to purchase the shares of the company, saying that it is a very good company, and here how he can give a qualified opinion in case there are any frauds or there are any misstatements in the company, in the financial statements of the company. This would be advocacy threat. Next, familiarity threat. Familiarity threat is simple, just like self-interest threat, but somewhat different. Let's say in the board of directors of the company, there is a particular director. Now this director is a relative of auditor. Okay, this would be familiarity threat. Next, intimidation threat. Intimidation threat means client is frightening the auditor, saying that if you give opinion against us, then next year we will not allot the audit to you. Like this, the client is frightening the auditor. This would be intimidation threat. Okay, these are the 5 types of threats which will prevent the auditor from complying with the 5 fundamental principles. Okay, now first of all, how the auditor will have to deal with these threats. Okay, auditor has found the threats. After finding the threats, whether he will leave them like that only, or he will make any efforts to eliminate the threats or to reduce the threats. The answer is he will make efforts to eliminate or reduce the threats. Let us see. First of all, auditor will identify the threats. Okay, whether there are any threats that are present in the organization which will prevent me from complying with the 5 fundamental principles. Yes, auditor has found some threats. Okay, after finding the threats, he will evaluate the threats. After evaluating the threats, he might reach 2 conclusions. The first conclusion is that, okay, after evaluating the threats, auditor feels that these threats are at acceptable level only. Okay, there is no issue if these threats are present. They are acceptable. They are at acceptable level only. In that case, auditor will do nothing. Okay, he'll just keep silent. In case after evaluation of the threats, auditor feels that these threats are not at acceptable level. Okay, there is a high amount of threat that is present which is not acceptable, which is not at acceptable level. In that case, auditor will address the threats by bringing them to acceptable level. Okay, how the auditor will address the threats? First of all, he will try to eliminate the circumstances which are causing these threats. Okay, he will try to eliminate the circumstances which are causing these threats. In case he fails to eliminate the circumstances, then he will at least try to apply the safeguards. Okay, he will try to apply the safeguards so that the threat will be reduced. In case he is not able to eliminate the circumstances and he is also not able to apply the safeguards against the threats, in that case what the auditor will do is, auditor will decline to accept the engagement, or he will withdraw the engagement. Okay, he will end the engagement. Hope this is clear. This is how auditor will deal with the threats. Hope this is clear. By this we have completed overview of code of ethics. Next, moving to NOCLAR. NOCLAR means non-compliance with laws and regulations. While performing the audit, if auditor finds that the entity has not complied with any of laws and regulations, then how the auditor has to respond? If you remember, even SA 250 deals with this same concept only. Okay, what is SA 250? Consideration of laws and regulations in an audit of financial statements. The same will be dealt even in case of NOCLAR, but there is a slight difference. The applicability of this NOCLAR is wider in nature. Okay, now basically if you see, I have said that the code of ethics, there are 3 volumes for code of ethics. In those 3 volumes, it is discussed how the auditor has to respond in case he finds any non-compliance with laws or regulations. But here in our study material, it is not discussed how the auditor will respond in case of NOCLAR, that is non-compliance with laws and regulations, but it is just confined, the discussion is just confined to applicability of this NOCLAR and differences between SA 250 and NOCLAR. Okay, that will be seeing here in this professional ethics. First of all, to whom this NOCLAR will be applicable? As of now, it is applicable only to audits of listed entities and members who are employees of listed entities. See, the provisions or the concept of this NOCLAR, okay, responding to non-compliance with laws and regulations, is not only applicable to CA in practice, it is also applicable to CA in service. Okay, members who are employees of listed entities, even to them this provisions or guidelines prescribed in this NOCLAR will be applicable. Now we will see some of the differences between SA 250 and NOCLAR. SA 250 is applicable only to audits, whereas NOCLAR is having a wider scope. It is applicable to audits, other assurance engagements, and also even for members in service. SA 250 is applicable only for members who are in practice. Okay, while performing the audit, SA 250 will be useful, but NOCLAR will be useful in all the cases. Okay. Next, in case of SA 250, stakeholders are not defined, whereas NOCLAR defines stakeholders as investors, creditors, employees and public. Okay. And in case of SA 250, there is no concept of imminent breach. What is imminent breach? See, auditor is performing the audit. During the audit, he feels that there might be non-compliance with laws or regulations. Okay, he has not confirmed that there is a non-compliance. He feels that there might be non-compliance. In these situations, what should be the response of the auditor? Okay, that would be imminent breach. Okay, in case of imminent breach, how should the auditor respond? That will be discussed in NOCLAR, but that concept of imminent breach is not present in case of SA 250. Okay, concept of imminent breach exists in case of NOCLAR. These are some of the differences between SA 250 and NOCLAR. Next, membership of the institute. Basically, we all know that in order to be eligible to act as member of the institute, first of all you have to clear your examinations and you have to make an applications to the institute, then they'll grant you the membership certificate. Now, what are the disqualifications? Okay, if a person possesses these disqualifications, then he cannot be accepted as member of the institute. What are those disqualifications? Let us see. First one, the age of the person is less than 21. Okay, in case the age of the person is less than 21, even though he cleared the CA examinations, he cannot be accepted as member of the institute. Okay, in order to be a member of the institute, member of our ICAI, the age of that particular person must be more than 21. Okay. Next, he is of unsound mind. If he is of unsound mind, he cannot be member of institute. Next, he is undischarged insolvent. Okay, undischarged insolvent cannot be member of institute, or his insolvency has been discharged. See, discharged insolvent but not obtained certificate from court stating that insolvency was due to his misfortune. See, first of all, if the member is if a person is undischarged insolvent, he cannot be member of the institute. And secondly, if the member is discharged insolvent, okay, even though the member is discharged insolvent, he cannot act as a member of the institute unless he gets a certificate from the court stating that the insolvency that has been caused to this person is due to misfortune. Okay, only in that case he will be eligible to become member of the institute. If he fails to get certificate from the court, even after becoming a discharged insolvent also, he cannot act as member. Hope this is clear. Even after becoming discharged insolvent, he has to get certificate from the court stating that his insolvency was due to misfortune. Next, disability. Convicted of an offence involving moral turpitude and punishable with imprisonment or transposition. Okay, in that case he cannot be accepted as member of the institute, but there are exceptions. Even though the person has been convicted of an offence, but pardon has been granted to him, in that case he can act as member of institute. Okay, exception 1. Exception 2, disability has been removed by central government. Okay, in these two exceptional cases, he can act as member of the institute even though he has been convicted of an offence involving moral turpitude. Next, proved to be guilty of misconduct on inquiry. Okay, in all these situations he cannot be a member of the institute. We can simply call them as disabilities to be a member. Okay, next concept, types of memberships. Basically there are two types of memberships. First one is associate chartered accountant, next one is fellow chartered accountant. Associate chartered accountant will be calling as ACA, fellow chartered accountant FCA. Now, when will be a person known as ACA? In order to call a person as associate chartered accountant, there is only one condition that is required. What is that? Member whose name is entered in register can use ACA. Okay. Once after qualifying the examinations, you make application to our institute asking for membership. Institute will grant you membership certificate, and institute will include your name in its register. Once your name is included in the register, you can call yourself as associate chartered accountant. Okay. Next, when can be a member be called as a fellow chartered accountant? There are two situations. First situation, ACA who is in continuous practice in India for at least 5 years. See, in order to call a member as a FCA, first of all he should be ACA. Okay, being ACA, he should be in continuous practice for 5 years in India. Okay, in this situation you can call that particular member as a fellow chartered accountant. Okay, what are the conditions? First of all, he should be ACA and he should be in continuous practice in India for 5 years. Hope this is clear. This is the first situation. Second situation in which you can call a member as a fellow chartered accountant. A member who is ACA for continuous 5 years and possesses such qualifications as prescribed by the council. See, in this second situation, the member is not in practice. Okay, he is just ACA for continuous period of 5 years. Okay, for continuous period of 5 years, he is ACA, but he is not in practice. And this type of member can be called as FCA if he possesses such qualifications as prescribed by the council. Hope this is clear. Next, those are types of memberships of the institute. Next, removal of name from the register. What are the situations in which the name of a chartered accountant can be removed from the register? First one, dead. If a person has dead, if a chartered accountant has dead, his name will be removed automatically. Next, requested to remove. He himself requested the institute to remove the name, then the institute will remove. Next, not paid prescribed fees. See, once you have obtained the membership, every year you have to pay certain amount, a membership fees to the institute. If you fails to pay such membership fees, even in that case, your name will be removed from this register. Okay. However, name will be restored on payment of annual fees, entrance fees and additional fees. Okay, once you repay the fees, again the name will be re-entered in the register. Next, possesses disqualifications. Okay, if the person possesses or attracts these disqualifications, even in that case the name of such member will be removed from the register. Hope this is clear. Next, penalties for falsely claiming to be a member of the institute. See, firstly, not being a member represents as a member. Okay, he has not qualified CA. Okay, he is not member of the institute, but he represents himself as member of the institute. In that case, he will be punishable with certain amount of penalty. We will discuss that. This is the first situation. Next, or being a member not having COP represents as member in practice. See, in order to practice, it is not sufficient that you just take a membership certificate. Along with membership certificate, you should also take a COP, certificate of practice. Only if you have the COP, you can practice as a CA. Now, without having this COP, you are practicing. Even in this case also, you are liable to punishment. What is the punishment? On first conviction, fine which may extend to 1000, and on subsequent conviction imprisonment of up to 6 months or fine up to 5,000 or both. This is the penalty that you have to remember. Okay. Next, certificate of practice. You cannot do practice without having this COP, and even for obtaining after obtaining COP, you have to pay certain annual fees to the institute. Next, cancellation of COP. What are the situations in which COP can be cancelled? First one, name removed from members of the register. See, if you want to hold COP, first of all your name should be present in the register of the institute as a member. Okay, in order to have COP, first of all you should have membership certificate. Without having membership certificate, you cannot hold COP. Therefore, this is the first situation in which your COP will be cancelled. Okay, once your name is removed from the memberships, from the membership register, even your COP will get cancelled. Next, found that COP was issued on false or incorrect information. Okay, while making application to the institute asking for the COP, it is found that the information that was given in the application was incorrect. Even in that case, the institute will cancel your COP. Next, member ceased to practice. Okay, if the member has stopped to practice, then what is the necessary of holding this COP? Unnecessarily paying annual fees. Okay, in that case also the institute will cancel the COP. Next, not paid the annual fees by 30th of September. Okay, if you have failed to pay the annual fees by 30th of September, even in that case your COP will be cancelled. But however, on payment of the requisite annual fees, again the certificate of practice will be restored from the date of cancellation. Hope this is clear. Next, members deemed to be in practice. What is this concept of deemed practice? See, basically the rule is that in order to be in practice, you have to hold COP, certificate of practice. Once you hold certificate of practice, you should comply with various rules prescribed by ICAI. Okay, in the schedules that we will be discussing, there are various compliances that has to be followed by chartered accountants in practice. Thereby, what many of the members started doing is they are not taking this certificate of practice. Just a second. Yeah, they are not taking this certificate of practice. Just a second, I will just close this and open again. Yeah, what some of the members are doing is they are not taking this certificate of practice. Without taking certificate of practice, they are involving in the practice. Without taking this certificate of practice, they are involving in the practice. Okay, now what is the use to the members if they involve in practice without taking certificate of practice? Okay, the benefit is that they need not comply with various rules and regulations prescribed by ICAI. Okay, now to prevent this type of behavior among members, ICAI has come up with concept of deemed practice. Okay, when a member without taking certificate of practice, if he involves or engages in practice of accountancy or involves in auditing, verification of financial statements, etc., and holds himself to public as an accountant or renders services, assistance on account procedures, recording, presentation, etc., such other services prescribed by the council. Okay, without holding a certificate of practice, if any member involves in these types of activities, then it will be deemed that such a member is in practice and he need to comply with all the regulations that are applicable or all the provisions that are applicable to a chartered accountant in practice. Hope this is clear. That is the relevance of concept of deemed practice. Next, note, a CA who is salaried employee of a CA firm shall be deemed to be in practice for limited purpose of training article assistance. Okay, if a chartered accountant is employed by a CA firm, okay, in that case this chartered accountant will be deemed to be in limited practice. Okay, limited practice of training article assistance. Okay, he cannot sign financial statements, but he can just train article assistants. Hope this is clear. Next, companies not to engage in practice. Okay, if you want to engage in practice, you should engage either as a sole proprietor or as a partnership firm. Okay, even LLP is also allowed, but you cannot practice in the form of a company. Hope this is clear. See, company includes LLP having a company as partner. See, first of all, you can engage in practice as a sole proprietor. Okay, you can also engage in practice as a partnership firm. Okay, and you can also engage in practice as LLP, provided that in this LLP there is no company as partner. Okay, provided in this LLP there should not be any company which is acting as a partner. Hope this is clear. In these three situations, in these three forms, you can start your practice, but you cannot practice in the form of a company. Next, contravention. In case there is any contravention, okay, if you practice as company, then director, manager, secretary or other officer of the company will be liable to a fine of up to 1000 rupees and on subsequent conviction with a further fine of up to 5000 rupees. Okay, that would be the minor penalty that will be imposed if you practice in the form of a company. Next, maintenance of branches. There are certain guidelines issued by the institute regarding maintenance of branches. Let us see. Separate member should be in charge of each branch. Let's say there is a particular CA firm. Now this CA firm is having two branches, branch 1, branch 2. Now the condition is that each branch must have a separate in charge who is also a chartered accountant. Okay, who should be also a chartered accountant. Okay, CA1, CA2. This is the first condition. Next, such CA must be partner of the firm or paid assistant in whole time employment. Okay, this CA must be associated with the firm either as a partner or as a paid assistant. Okay, either as a partner or as a paid assistant. Okay, that is the second condition. Next, such in charge must be actively associated with such office. Okay, the third condition is that such in charge must be actively associated with such branch. What is meant by actively associating? Okay, it will be deemed that the in charge is actively associated with the branch if he resides in the place where the branch is located for at least 182 days. Okay, not less than 182 days, or attends not less than 182 days. Okay, let's say this branch 1 is present in city 1. Now this CA1 must reside in this city for a period not less than 182 days, or must attend this branch for period not less than 182 days in a particular year. In that case, it will be deemed that such in charge is actively associated with the branch. Hope this is clear. Next, exemption from second office. Now, for the second office, there has been an exemption granted from these conditions in particular situations. What are those situations? Let us see. First of all, the first situation in which exemption from the condition is the second branch is also located in the same premises. Let's say there is a particular building. Okay, in this building, in the first floor, office 1 is located. In the fourth floor, office 2 is located. In this case, these two offices will not be called as separate branches as per the institute, and they need not comply with these conditions. Hope this is clear. Next, located in the same city. There is a particular city. Okay, in the same city, both the offices are located, office 1, office 2. Even in this case also, they need not comply with all those conditions which we have discussed. Next, located within 50 kilometers from the municipal limits of city of the first office. See, let's say this is office 1. Okay, this office 1 is located in this city. Okay, these are the municipal limits of this city. Now, from this city, within 50 kilometers, okay, from the municipal limits of this city within 50 kilometers. Okay, if the second office is located within 50 kilometers from the municipal limits of this first office, even in that case, they need not comply the second office. Okay, for the branches, the guidelines prescribed for the branches will not be applicable in this situation. Okay, if the second office is situated within 50 kilometers of the municipal limits of the city of first branch or first office or head office, you can say. Okay, next, those were the exemptions. Next, member can place name board at his residence but not the name of the firm. Okay, at the residence of the member, he can have the name board stating saying the name of the member and saying that he is a chartered accountant, but no reference can be made to the name of the firm in which such member is a partner. Hope this is clear. At the residence. Next, guidelines for practice in hill areas. Basically, in some of the hill areas, what happens is during winter season there will be fog. Okay, it will not be convenient to practice in those hill areas in the winter season due to the reason of fog. Thereby, for such types of offices which are located in the hill areas, certain guidelines are prescribed. What are they? See, they can open temporary office in a city in plains for a period not more than 3 months in a year. Okay, members who are having their practice in the hill areas can open a temporary office in the plain areas, okay, in the normal area for a period not more than 3 months. Okay, if he opens a temporary office, then it will not be treated as a branch and he need not comply with the guidelines that are prescribed for the branches. Next, at a temporary office, name boards has to be displayed only during such a period of functioning. Okay, at the temporary office, the name board has to be displayed only during the period for which the office for which such temporary office is open. Hope this is clear. Next, do not mention temporary office in letterheads, visiting cards and other stationery. Okay, in the letterheads and the visiting cards of the auditor of the chartered accountant, he should not mention the address of this temporary office. Okay, next, inform about opening and closing to the institute. Okay, whenever he opens this temporary office, he should inform to the institute, and whenever he closes the temporary office, he has to inform to the institute. Hope this is clear. Another important point is that when he opened temporary office, it is not necessary that he should close the main office. Okay, he can continue the main office in such a hill area. Along with such main office, he can also open temporary office in the plain area. Hope this is clear. No need to close regular office. Okay, next, moving to the disciplinary proceedings. Basically here we will be having two schedules. Okay, now first of all, in order to initiate disciplinary proceedings against a chartered accountant, some complaint will have to be received. Now, how the to whom the complaint has to be made, and once the complaint is made, how it will be dealt, we will just see that flow chart. After that, we will go to schedules. See, first of all, in this process there will be three bodies involved. First one is disciplinary directorate, second one is board of discipline, and third one is disciplinary committee. Now the complaint will be received by disciplinary directorate. Okay, disciplinary procedure, receipt of complaint by disciplinary directorate. Once the complaint is received by disciplinary directorate, what he will do is, he will prima facie decide whether there is guilty or not guilty. If he decides that prima facie there is a guilty, then he will check under which schedule the guilty is falling. If the guilty is falling under first schedule, the case will be transferred to board of discipline. In case the guilty is falling under second schedule or both the schedules, then the case will be transferred to disciplinary committee. Hope this is clear. Now, once the case is transferred to either board of discipline or disciplinary committee, they will first of all, they will also again on prima facie basis, they will either accept or reject the case. Okay, if they reject the case, it will be closed. In case they accept, then they will conduct inquiry, and based on the inquiry, if the CA is found to be guilty, okay, yes, the CA is found to be guilty. In that case, if it is relating to first schedule, then CA will be reprimanded. Reprimanded means a warning will be given, or the name of the CA might also be removed from the registrar up to 3 months. Okay, and also a fine of up to 1 lakh can be imposed. In case of second schedule or both the schedules, CA will be reprimanded, name of the CA will be removed for such a period, okay, as the board of as the disciplinary committee may decide, and fine up to 5 lakh may be imposed. Okay, this is the procedure if prima facie found to be guilty. Okay, in case prima facie not found to be guilty by disciplinary directorate, in that case disciplinary directorate will submit all the information to board of discipline. Okay, now board of discipline also feels that yes, the person is not guilty. Okay, board of discipline also accepts that the person is not guilty. In that case will be closed. In case board of discipline feels that the conclusion, not the conclusion, the decision of this disciplinary directorate is not correct, in that case it will reject and advise the directorate discipline to further investigate the case. And if the case is relating to first schedule, the board of discipline itself will take the cognizance of the matter, because the offences, the guilt is relating to first schedule will be dealt by board of discipline na. So it will proceed if it is related to first schedule. In case if it is related to second schedule or both the schedules, then board of discipline will transfer the matter to disciplinary committee. Okay, this is the entire disciplinary procedure that will be followed once the complaint is given against a chartered accountant. Hope this is clear. Now moving to the schedules. Basically, as you all know, there are two schedules, schedule 1, schedule 2. Under schedule 1 there are 4 parts, and under schedule 2 there are 3 parts. Okay, schedule 1, schedule 2. There are certain guilties in schedule 1 and there are certain guilties in schedule 2. Now you might get a doubt that why two schedules are given. Okay, all the guilties can be given in one schedule now. Why two schedules are divided? Basically, the guilties that are present under second schedule are more serious in nature. Okay, but under first schedule they are not so serious in nature. And also another difference between first schedule and second schedule is that under first schedule the guilties are related to administrative aspects of chartered accountants, like sharing the fees and entering into partnership, acceptance of audit, like these. Under guilties of first schedule, the work of the chartered accountant is not involved. Okay, here all the guilties are related to administrative guilties, whereas under second schedule the guilties are related to work conducted by the auditor. Okay, work of auditor. Thereby the offences of schedule 2 are more serious in nature, because here the client is involved. Okay, a third party is involved. Now under first schedule there are 4 parts. Under first part we have 12 clauses. First part deals with professional misconduct of CA in practice. Second part deals with professional misconduct of CA in service. Third part deals with professional misconduct of CA in general. Okay, both practice and service. And fourth part deals with other misconduct. Okay, these are the 4 parts of schedule 1. Next, under schedule 2 we have 3 parts. First part deals with professional misconduct of CA in practice. Second part deals with professional misconduct of CA in general. Okay, here for second schedule there is no specific part for CA in service. And third schedule, third part as it is, it will deal with other misconduct. Okay, last part of both the schedules are same. Okay, other misconduct. Now first part has 12 clauses, second part has 2 clauses, third part has 3 clauses, and fourth part has 2 clauses. And under schedule 2, first part has 10 clauses, second part has 4 clauses, and third part has 1 clause. Now we will discuss all these clauses one by one. Moving to the schedule 1 part 1 clause 1. First clause deals with, first of all, the general sentence that has to be written in exam for every answer related to schedules is: a CA in practice is deemed to be guilty of professional misconduct if he is so and so. Okay, if the answer is related to schedule 1 part 1, okay, you should use the term CA in practice. If it is related to part 2, you can use the term CA in service or CA in employment. And if it is related to third part, CA in general. Okay, these are the common lines that you have to write. Now starting with clause 1. Okay, schedule 1 part 1 clause 1. What clause 1 deals with? Basically clause 1 does not allow a chartered accountant in practice to allow any other person to practice in his name. Okay, simply we can call it as clause 1 prohibits lending of the name, but there are certain exceptions to this. What are those exceptions? We will see. First of all, let me read this. A CA in practice is deemed to be guilty of professional misconduct if he allows any person to practice in his name as a chartered accountant, unless, these are the exceptions. What are the exceptions? Unless such other person is also a CA in practice and is in partnership or employed by him. Okay, the exception is that the other person whom CA is allowing to practice in his name should also be a chartered accountant. Okay, only being chartered accountant is not sufficient. Okay, apart from being a chartered accountant in practice, okay, apart from being a chartered accountant in practice, that chartered accountant must be either partner of this chartered accountant or in employment of this chartered accountant. Okay, this is the exception. In this case, he can allow such other chartered accountant in practice who is in employment or who is partner to practice in his name. Okay, let us see. Clause 1. See, the other person is CA in practice and he is in partnership with this chartered accountant, then he is allowed to practice in his name. The other chartered accountant is CA in practice and he is employed by this chartered accountant. Even in this case, he is allowed to practice in his name. If the other chartered accountant is not CA in practice, in that case, he is not allowed to practice in his name, and even here he is not allowed to practice in his name. Okay, this condition and any one of this condition has to be satisfied. Okay, that is clause 1. If you see, clause 1 and clause 12 are somewhat similar. What clause 12 says? As per clause 12, CA in practice should not allow any other person to sign on his behalf. Let us see. Clause number 12, I will just open that. It is in, yeah, clause 12. Allows a person not being a member of institute in practice or member not being his partner to sign on his behalf or on behalf of his firm any balance sheet, profit and loss account, report or financial statements. Here there are two exceptions. First of all, on behalf of chartered accountant in practice, no other person should sign. Okay, but there are two exceptions to this. What are they? Allows any person not being member of institute in practice. Okay, on behalf of a particular CA, another CA who is in practice can sign. That is the first exception. Second exception, a member not being his partner, that means a member who is partner of this chartered accountant can also sign on behalf of this chartered accountant. Okay, why this two exceptions are allowed? Because there might be joint audits. Okay, this clause will help in case of joint audits, because in case of joint audits, if the opinion of both the auditors is same, they will issue only single report. In that case, any one auditor will sign. Okay, and also this clause will also encourage auditors to accept joint assignments. Okay, but however, there will be some administrative aspects like signing of vouchers or acknowledging the receipt of posts. Okay, these kind of signatures can be signed by any other person on behalf of chartered accountant. See, the power to sign routine documents on which a professional opinion or authentication is not required to be expressed may be delegated. Hope this is clear. Those are clause 1 and clause 12. Moving to clause 2 of schedule 1 part 1. What it deals with? Basically, clause 2 prohibits a chartered accountant from sharing his fees with other persons. Okay, while chartered accountant conducts from professional works, he will receive some fees. Now from this fees he should not give any share to any other person. This is a general rule as per clause 2, but there are certain exceptions to these. What are those exceptions? That means in those exceptions, chartered accountant is allowed to share his fees. Let us see what are those exceptions. First of all, let me read the clause. Pays or allows or agrees to pay or allow directly or indirectly any share, commission, brokerage in the fees or profits of his professional business to any person other than, okay, these are the exceptions. What are they? Other than member of institute. That means for member of institute, the chartered accountant in practice can share his fees or profits with a member of institute, whether he is in practice or not in practice, or a partner. See here, clause 2 is linked to clause 4. Clause 4 deals with partnership. Okay, who are the people with whom a chartered accountant in practice can enter into partnership. Now in clause 2 he uses the term partner. That means all the people with whom a chartered accountant is allowed to enter into partnership as per clause 4. Okay, with all those people the chartered accountant is also allowed to share his profits. Hope this is clear. Okay, he can share with member of institute, he can share with his partner or retired partner. Okay, let's say there is a partnership firm. In that partnership firm there are 3 partners. Of these 3 partners, one of the partner is retiring. In this case, if these other two partners wanted to share the profits of the firm with this retiring partner, then they can share. There is no prohibition in the type of sharing of the fees. Or legal heir, legal representative of the deceased partner. Let's say one of the partner has died. Now if the partnership agreement allows, the remaining partners can share the profits with the legal representatives of the deceased partner. Okay, next, or a member of any other professional body. We'll see what are those other professional bodies, or with such other person having such qualifications as may be prescribed. We'll also see what are such other qualifications for the purpose of rendering such professional services from time to time in or outside India. Basically, the general rule is the chartered accountant should not share his profits, but he can share in certain exceptional cases. What are those exceptional cases? First one is he can share with member of institute. Second one is he can share with his partner. Third one is he can share with retired partner. Fourth one is he can share with legal representative of the deceased partner. Fifth one is he can share with professionals of such professional bodies. Okay, members of such professional bodies that we'll discuss, and he can also share with such other persons having such qualifications as may be prescribed. There are totally 6 exceptions. Now we'll see what are those other professional bodies. See, the members of ICSI, ICWAI, Bar Council, and Indian Institute of Architects and Indian Institute of Actuaries. With the members of these 5 institutes, chartered accountant is allowed to share his profits. And who are persons having such other qualifications? Okay, even with these people also chartered accountant is allowed to share his profits. Who are they? CS, CMA, Actuary, Bachelor in Late. Late means L for law, A for accountancy, T for technology, and E for economics, I guess. Yes, economics. Yeah. a professional who is bachelor in these subjects, okay, chartered accountant is allowed to share profits with them, and also with MBA. With these people, CA is allowed to share his profits. There is another exception regarding sharing of fees. Basically what happens is certain state governments require chartered accountants to deposit some of the amount in order to allot cooperative society audits. Okay, basically this deposit amount is towards meeting the administrative expenses. Considering this, institute has introduced this exception wherein chartered accountants are allowed to share percentage of their fees with the governments in order to meet administrative expenditure. See, percentage of fee can be paid to government to meet the administrative expenditure. Example of this case would be state cooperative society audits. Okay. Next, check substance over form. That is, nomenclature is not important. Let's say for example, see, there is a particular audit. Now under this audit, CA will receive a fees of 2 lakh every year. Okay, like this he is receiving every year, and also every year 50% of this fees, 1 lakh, is being to paid a particular person every year in the name of a professional fees or some office expenditure. Like this, in some different name, he is paying a certain percentage, a fixed percentage of the fees. Okay, in this case you should not check the name or the nomenclature in which it is paid. You should check the substance of the transaction. Okay. Next, moving to treatment of goodwill. Basically, let's say there is a sole proprietorship firm. Okay, in this let's say a particular CA, Mr. A is in practice. Suddenly Mr. A has died. Now legal representatives of Mr. A wanted to sell the goodwill of this firm. Okay, he has been practicing for around 30 years, thereby it will be having lot of clients and lot of goodwill. Thereby the legal representatives of this deceased member want to sell this goodwill to another member in practice. Okay, now for this sale, the legal representatives wants to receive share of profits. Okay, every year they wants to receive share of profits. Whether such receiving of share of profits is allowed or not, the answer is no. Receiving of share of profits by legal representatives of deceased member of a sole proprietorship firm is not allowed. They have to outrightly sell the goodwill. Okay, they have to outrightly sell the goodwill for a lump sum. Hope this is clear. See, proprietorship firm, no sharing of fees or profits, but they can sell goodwill to other eligible member of the institute outrightly for a lump sum amount. Hope this is clear. But in case of partnership firms, profits can be shared if partnership agreement provides for the same. Let's say there are 3 partners, one of the partner has died. Now the remaining 2 partners can share the profits of this partnership firm with the legal representative of this deceased partner, provided that the partnership agreement must allow for the same. Hope this is clear. And here, for selling of the goodwill of the sole proprietorship firm, if the death of proprietor has happened on or after 30 August 1998, in that case, name of the firm will be kept in abeyance up to 1 year from the date of the death. Okay, the institute will not allow or will not grant the same name to other member up to 1 year from the date of death of this particular member. Hope this is clear. Next, death on or after 30 August 1998 and there is a dispute of legal heir. Okay, the member has died. After his death, there is a dispute among legal representatives regarding the true legal representative. In that case, these legal representatives have to inform that there is a dispute among ourselves to the institute. Once this information has been given, institute will keep the name of the firm in abeyance till up to 1 year from the completion of this dispute. See, if information regarding dispute intimated within 1 year to institute, name shall be kept in abeyance till 1 year from settlement of dispute. See, here first of all, member has died on this date. After 2 months, the legal representative have informed to the institute that there is a dispute. Now, from this date, the name will be kept in abeyance till dispute is resolved. Okay, dispute is resolved on this date. Okay, after dispute has been resolved, the name will be kept in abeyance for another 1 year. Okay, totally the name will be kept in abeyance for this entire period. Hope this is clear. Next, death on or before 29th August 1998. In that case, first of all, the sale has to be completed before 20th August 1998 and the name will be granted if it is still available with the institute. Hope this is clear. That is clause number 2. Moving to clause number 3. In clause number 2, we have seen with whom a CA in practice can share his fees or his profits. In clause 3, we will be seeing the other professionals from whom CA in practice can receive their share of profits. Okay. Clause 3. Accepts or agrees to accept any part of profits of professional work of a person who is not a member of institute. First of all, basically the general rule is that a CA in practice should not accept share of profits of any other profession who is not a member of institute. Okay, let's say there is a doctor. Now doctor is not member of our institute. Now CA in practice cannot accept the profits or fees earned by the doctor. Okay, but there are certain professionals from whom CA in practice can receive their share of profits or the fees. Who are they? Let us see. Exceptions. Provided that nothing herein contained shall be construed as prohibiting a member from entering into profit sharing or similar arrangement, including receiving any share, commission or brokerage in the fees with a member of such professional body or other persons having qualifications as referred to in item 2 of this part. That means in the clause 2 we have discussed certain professionals with whom CA in practice can share his profits. Now clause 3 says that CA in practice can receive profits or fees of all those professionals who have been listed in clause 2. Hope this is clear. Next, referral fee from other members can be accepted. Okay, a CA in practice has referred some of the clients to another CA in practice. Now this CA in practice who has referred the work to other CA, he can receive the referral fee from such other chartered accountant in practice. There is no prohibition on that. Next, clause 4. Clause 4 deals with entering into partnerships. Let us see. Enters into partnership in or outside India with any person other than CA in practice or such other person who is a member of any other professional body having such qualifications as may be prescribed. That means a chartered accountant in practice is allowed to enter into a partnership only with another chartered accountant in practice or such other person who is a member of any other professional body or having such qualifications as may be prescribed. What are those other professional bodies? What are such other qualifications? We will see. Including a resident who, but for his residence abroad, would be entitled to be registered as a member under clause 5 of subsection 1 of section 4, or whose qualifications are recognized by central government or council for the purpose of permitting such partnership. Basically, this here there might be certain individuals who qualified equivalent examinations of CA in another countries, like best example is CPA. Okay, like this there will be other chartered accountancy courses in other countries. Now if any person has qualified those other courses of other countries, they are allowed to enter into partnership with Indian chartered accountants. Hope this is clear. And these are other professionals with whom CA in practice can enter into partnership. Who are they? CS, CMA, advocate, engineer, architect and actuary. That is clause number 4, which is related to entering into partnerships. Moving to clause 5. Now clause 5 and clause 6, these both clauses deals with advertisements. Okay, prohibition of advertisements. Starting with clause 5, secures either through services of a person who is not a employee of such CA, or who is not a partner, or by means which are not open to a CA, any professional business. Okay, chartered accountant should not secure work by means which are not allowed to him. Okay, he can secure the work through an employee. Okay, if he has employed any person, through that employee, CA can secure the work, or through his partner also work can be secured. Okay, apart from these two people, chartered accountant cannot appoint any agent to secure the work from him, work for him. Okay, provided that nothing herein contained shall be construed as prohibiting any agreement permitted in terms of clause 2, clause 3 and clause 4. Okay, clause 5 does not prohibit entering into agreement relating to sharing of fees or partnership as per clause 2, 3 and 4. Okay, next clause 6. Even clause 6 is relating to advertisement, securing the work. Solicits clients or professional work either directly or indirectly by circular, advertisement, personal communication or interview, or by any other means. Okay, soliciting work through circular, advertisement, personal communication, interview, or through any other means is not allowed. Okay, provided that nothing herein contained shall be construed as preventing or prohibiting. These are the two exceptions wherein a chartered accountant in practice can make a request to another chartered accountant asking to provide any work if available with such other chartered accountant. Okay, any CA from applying or requesting for or inviting or securing professional work from another CA in practice. Okay, a particular CA in practice can ask work from another CA in practice, or that another CA in practice can himself give work to the CA in practice. That is not prohibited. Next point is related to tenders. Let us see. A member from responding to tenders or inquiries issued by various users of professional services or organizations from time to time and securing professional work. As a consequence, a chartered accountant in practice is not prohibited from responding to the tenders. Okay, in many cases tenders will be called by various organizations relating to allotment of audits or any other work. Now, chartered accountant in practice can participate in those tenders and can secure the work. But relating to these tenders, there is one particular point that has to be remembered. Now tenders that are called in those areas which are specifically reserved for chartered accountants. Example, audits, okay, statutory audits, tax audits, these are exclusively reserved for chartered accountants only. Only CAs can conduct these works. Now if at all any tenders are called for these works which are exclusively reserved for chartered accountants, no chartered accountant can respond to such tenders. Okay, apart from those types of tenders, tenders for other types of works can be responded by chartered accountants, but tenders for works which are exclusively reserved for chartered accountants cannot be responded by the chartered accountants. Hope this is clear. But for this point there is an exception. Let us see. Do not respond to tenders for works which are exclusively reserved for CS. This is a basic rule. You should not respond. But in one situation you can respond. When? Exception. Minimum fee prescribed or open to persons other than chartered accountants. If the tender document specifies the minimum fees that has to be quoted, okay, in that case chartered accountant can respond to the tenders even for the works which are exclusively reserved for the chartered accountant. Hope this is clear. Now there are some other cases in class 6, we will see that. Yeah. Further prohibitions. Advertisement and note in press. You cannot give advertisements in the press. Exceptions. Request another chartered accountant. Okay, you can request another chartered accountant for asking the work, or there is changes in the firm. Okay, in case you are changing the name of the firm, or there is a change in the address of the firm, or there is change in the contact details of the firm. In those cases you can advertise those changes. Okay. Next, advertisement in newsletters of the institute. You can also give advertisements in the newsletters that the Institute of Chartered Accountant publishes. Okay. Next, application for empanelment for allotment of audit and other professional work. See, a CA can make an application for including his name in the empanelment maintained by any organization, but roving inquiries is prohibited. That means, see, if a particular CA is having knowledge that a particular organization is maintaining an empanelment, then he can make a request for that organization to include his name. But chartered account, the CA is not having any idea of whether the organization is maintaining a empanelment or not. Without having any knowledge, he is requesting to various organizations, okay, stating, in case you maintain any empanelment, please include my name. In case you maintain any empanelment, please include my name. Okay, these are known as roving inquiries. Okay, these types of roving inquiries are prohibited. Next, publication of books, articles or presentation. Okay, it is not prohibited. Publication of books is not prohibited and publication of articles is also not prohibited, but mentioning professional attainments is prohibited. Okay, in those books you should not mention your professional attainments, but you can mention name of the firm. Okay, this is the point which have to be remembered by you. Okay, in the books published by a chartered accountant, he can mention the name of his firm. Next, issue of greeting cards or invitations. Basically, issuing greeting cards and invitations is generally prohibited, but there are certain exceptions to that. Exception: you can issue greeting cards or invitations for marriages, religious ceremonies or office inaugurals, provided these invitations are issued only to your clients, your relatives and your friends of members concerned. Okay, you can issue these invitations only to your clients, relatives and friends. Hope this is clear. Now relating to this particular point, let's say CA1 and CA2. Okay, these two are partners. Now CA1 is having his marriage, thereby he is issuing invitations. Okay, now he can issue invitations to his relatives, to his friends, to his clients. Now the question is whether he can issue, CA1 can issue invitations to relatives, friends and clients of CA2. The answer is no. So this is clear. Next, advertisement for silver, gold and platinum or centenary celebrations exception may be published in newspaper or newsletter. Okay, you can advertise or publish that your organization or your firm is celebrating its silver jubilee or golden jubilee in a newspaper. That is not prohibited. Sponsoring activities. Okay, you should not involve in sponsorship activities, but there are certain exceptions to it. What are they? If any program is being conducted by POU of ICAI, POU means Program Organization Unit of ICAI, with the prior approval of CPE Directorate, you can sponsor that activity which is being conducted by POU of ICAI. Or if members are conducting CSR activities on their own, okay, with their own money they are conducting CSR activities, then they can use prefix CA to their name in those activities, but cannot use firm name and CA logo. Okay, these two cannot be used, but he can use the prefix of CA in front of his name. Next, advertisement of teaching, coaching activities by members through hoardings, posters, banners is prohibited. Okay, sharing firm profile with prospective clients. See, you cannot share profile of your firm to the prospective clients. Prospective clients means those are not your clients, but there is a probability of them becoming your client. Okay, you cannot share your profile with those prospective client except that the client himself asked to give your details relating to firm profile, then you can share your profile. Exception, specific query of the client. Okay, television or movie credits is permitted but should not be different from other credits. Okay, acceptance of original professional work by a member emanating from the client introduced to him by another member is prohibited. See, let's say CA1 is having particular client. Okay, particular client. Now this particular client wanted some services. Okay, but CA1 doesn't deal in that area, thereby CA1 referred this client to CA2. Okay, CA2 has performed that particular work for this client. Now later on, this person, okay, this client wants another service, okay, which was earlier being done by CA1 himself. Okay, now this client approaches CA2 to perform this another work which was earlier being performed by CA1. In this case, CA2 should not accept this work. Okay, first of all, CA2 should inform this client that you please approach through CA1. Okay, that has to be the guidance given by CA2 to the client. Hope this is clear. Next, there are certain guidelines that are given by the council relating to advertisements. Let us just go through that. Write-ups. Basically, advertisements through write-up is specifically permitted by the council, but provided that there are certain conditions that has to be followed. What are they? Allowed, provided the information that is given in the write-up must be true. Okay, and no false claims must be made in those write-ups, and no exaggerated claims are allowed in those write-ups, and also font size of those write-ups should not exceed 14. Okay, these are some of the guidelines relating to advertisements through write-ups. Next, website of CA firms. CA firms can have their own website. Okay, it is not prohibited to maintain a website. They are permitted to maintain a website. However, there is no particular standard of website that is prescribed by the institute, but there are certain guidelines that are issued. Let us see. Firstly, the maintaining of website is allowed, and website must run on pull model. What is this pull model? See, let's say in Google browser, you go and search CS near me. Okay, then some list will be displayed. This is known as pull model. That means client is asking the request, then the results are coming. That is pull model. Okay, push model. Push model is like clients are just surfing through the web. Okay, they are on some other websites. There you will be seeing advertisements in the Google. Okay, there our CFM has given advertisements. Okay, providing link to the website. This is push model, wherein client has not requested for the website, but the firm itself through the advertisements presenting before the client and making the client to click on their website. This is push model. Okay, here the firm, the chartered accountant himself is pushing his website. Okay, whereas in the first case, client himself is pulling the website of the chartered accountant. This is the difference between pull model and push model. Only pull model is allowed, but push model is not allowed. Hope this is clear. Next, disclosure of client names, fee charged is allowed if required by the regulator. Okay, generally on the website you should not disclose the name of the client and the fees charged from that client, but in case there is any requirement from the regulators, okay, to disclose the name of the client and the fee charged from that particular client, then you can disclose, provided that below that disclosure you should also mention as per which regulator requirement you are mentioning these name of the client and the fee charged. Hope this is clear. Next, and on the website you can display passport size photo of the respective member. Okay, displaying passport size photo is only allowed. Okay, next, website link can be provided in social networking sites like Facebook and Instagram. You can provide the website link. That is not prohibited. Okay, online third party platforms. Okay, these days we are seeing various third party platforms like ClearTax, wherein you can hire a chartered accountant. Okay, now on these third party platforms you can provide only consultancy services. Okay, apart from consultancy services you cannot provide any other services on these third party platforms, and also you should not mention contact address on these third party websites. Hope this is clear. Next, publication in telephone or other directories. You can publish the name of the firm in the telephone directories and other directories subject to certain conditions. It must appear only under category CA. Okay, and member or firm should belong to the same town. Okay, let's say a particular telephone directory is being published in a particular town. Let's say it is being published in Mumbai. Okay, a particular telephone directory is being published in Mumbai, only Mumbai. Now in this telephone directory, all the CS who are having their practice in Mumbai can list their names, but apart from CS practicing in Mumbai, no other CS can list their names in Mumbai. Okay, let's say another chartered accountant is practicing in Hyderabad. This chartered accountant cannot list his name in the telephone directory that is being published in Mumbai. Hope this is clear. And follow alphabetical order. Okay, next, listing on application based service provider aggregators is not allowed. Example, Urban Clap. Okay, where in this Urban Clap app all the service providers will be listed, like carpenters. Okay, like this various service providers will be listed. Okay, in these types of platforms a chartered accountant should not list himself. Hope this is clear. Next, exemption: can advertise name, address of firm for recruiting staff for own office or on client's behalf. See, in case the CA office requires any staff, now for purpose of recruiting the staff, they can give the advertisement, okay, or for recruiting staff on behalf of client, also the CA firm can give advertisements. That is not prohibited. And however, should not use the term well-known firm in that advertisement, and that advertisement should also be in a proper format. Okay, you should not give such types of advertisements in the front page. Okay, there will be certain area in the newspaper, like in classifieds, there will be certain area where you can give these types of advertisements. Only in those areas you have to give. Hope this is clear. That is clause number 6. Next, clause 7. It deals with use of designation other than CA. Okay, let us see. Advertises his professional attainments or services, or uses any designation or expression other than chartered accountant on professional documents, visiting cards, letterheads or signboards, unless it be a degree of. That means these are the exceptions. Okay, apart from CA, you can use following designations: it be a degree of university established by law in India or recognized by central government, or a title indicating membership of Institute of Chartered Accountants or of any other institution that has been recognized by central government or may be recognized by the council, provided that a member in practice may advertise through write-up setting out the service provided by him or his firm and particulars of the firm, subject to such guidelines as may be issued by the council. Now, basically CA cannot use any other designations. Okay, other designations cannot be used on professional documents. Exception: these two designations can be used. What are they? Insolvency professional and registered valuer and membership of foreign institute of accountancy. Okay, these three designations. If a chartered accountant, apart from being chartered accountant, he is also a registered valuer or an insolvency professional, or he has qualified accountancy examinations of any foreign country. Okay, these three designations can be used by CA along with the designation of CA. Okay, in his professional documents. Whether date of setting up of the practice can be indicated on the professional documents, the answer is no, cannot be mentioned. Whether he can practice as advocate, the answer is yes, he can practice as advocate. Okay, our institute has permitted a chartered accountant to practice as advocate, but the bar council has not permitted. See, allowed, but he cannot use designation CA and advocate simultaneously. Okay, however, even though our institute has permitted to practice as advocate, bar council has not granted permission to a chartered accountant to practice as an advocate. Next, practice as company secretary and cost management accountant is allowed. Writing articles or letters to the press, the CA can use the prefix CA in front of his name. Okay, while writing articles in the press. Size of the signboard, it is a matter in which members should exercise their own discretion. Okay, based on their own discretion, they can set up whatever the size of the signboard they want. Next, public announcement with details of directors. Take necessary steps to ensure that such prospectus or public announcements or public communications do not advertise his professional attainments. Okay, that is clause number 7. Moving to clause 8. Clause 8 deals with communication with previous auditor. Let us see. Accepts a position as auditor previously held by another chartered accountant or a certified auditor who has been issued certificate under the restricted certificate rules 1932 without first communicating with him in writing. Okay, in case any auditor is accepting a new assignment which was earlier performed by another chartered accountant, then before accepting such assignment he must communicate with the previous auditor and take his approval. Only then he can accept this assignment. This clause is applicable for all types of audits, okay, whether it might be stat audit, internal audit, or a tax audit, whatever the audit it might be. This is applicable for all types of audits except for special audit. Okay, in some situation in Income Tax Act and GST and Companies Act, the authorities can order for a special audit. Okay, except for those special audits, this clause 8 is applicable to all the audits. And clause 8, that is prior communication with the previous auditor, is not applicable for assignments like bookkeeping, certification and other cases where the outgoing auditor is not a chartered accountant. Okay, in those cases communication with the previous auditor is not required. And while you have communicated, there should be a proof of communication. Okay, in case you have communicated electronically through email, there will be proof. In case you have communicated through post, you have to ensure that such communication is through registered post acknowledgement due, okay, RPAD, so that you will be having a proof that the communication has been made through the post. And in case you have communicated, okay, you have sent the post to the previous auditor, but the post returned back to you with terms premises locked or no address found. In these cases it will be deemed that you have properly communicated to such previous auditor. Hope this is clear. Next, you have communicated with the previous auditor stating that this client has approached me, I am going to take up this assignment. Is there any issues with this client? Like this you have communicated. Based on your communication, the previous auditor replied that this client has not paid undisputed fee. Okay, the client has not paid undisputed fee to the previous auditor. In this case you should not accept this assignment, okay, because undisputed fee has not been paid. But there is an exception to this rule, wherein you can accept the audit even though undisputed fee has not been paid to the previous auditor if such entity is a sick unit. Okay, sick unit means total losses incurred by such unit or more than the net worth of such unit. Okay, in this case, even though it has not paid the undisputed dues to the previous auditor, since it is a sick unit, you can accept such audit. Next, in case of tight schedule, you can give conditional acceptance. That means before accepting you have to make communication to the previous auditor and you have to wait for reasonable time for his reply. Okay, but in case of tight schedule, that means the time available for conducting the audit is very less. Basically this will be in case of bank audits. Okay, in that cases what you can do is you can communicate with the previous auditor and you can give this conditional acceptance to the client. Okay, based on the condition that I am accepting your audit subject to reply from the previous auditor. Okay, this type of conditional acceptance can be given in case of tight time schedule. Okay, that is clause number 8. Moving to clause number 9. Accepts an appointment as auditor of a company without first ascertaining from it whether the requirements of section 139 and 140 of Companies Act 2013 in respect of such appointment have been duly complied with. Okay, before accepting the audit, the auditor must check whether the company has complied with section number 139 relating to appointment of auditor and section number 140 relating to resignation or removal of the auditor of the Companies Act 2013. Okay, only after ascertaining the compliance of section 139 and 140, the auditor has to give his acceptance. Fine. Next, clause number 10, which deals with acceptance of fees based on percentage basis. Let us see. Generally, fees based on percentage basis is not allowed, but there are certain exceptional situations in which it is allowed. Let us see. Charges or offers to charge, accepts or offers to accept in respect of any professional employment, fees which are based on percentage of profits or which are contingent upon findings or results of such employment, except as permitted under any regulations made under this act. Okay, percentage fees is not allowed, but in these cases it is allowed. If you are charging fee as a liquidator or receiver, okay, liquidator charges the fee based on the amount realized, which is allowed. Next, auditor of cooperative societies, okay, cooperative societies auditor can charge fees based on percentage basis, okay, percentage of turnover or percentage of profits, like this he can accept. Next, if a chartered accountant is valuing any asset, even in this case also he can accept percentage basis of fee. Next, fundraising services, okay, if the auditor is involved in any fundraising services for the client, even in this case he can charge fees based on percentage basis, okay, percentage of fund raised. Next, debt recovery services, cost optimization services, such other audit services as decided by the council. Okay, these are the cases in which percentage basis of fees can be accepted. Next, clause 11, engaging in business other than CA in practice is not allowed. C, engages in any business or occupation other than profession of chartered accountant unless permitted by the council so to engage. Okay, you have to take prior permission of the council, and there are certain activities for which council has given general permission. Let us see. General resolution, these are the list of activities for which council has given general permission. Let us see, let us quickly go through this. These are general permissions for which you again need not specifically request to the council for the permission. First one, employment under chartered accountant in practice, okay, private tutorship, authorship of books, holding of life insurance agency license for limited purpose of getting renewal commission. Next, attending classes and appearing for any examination, holding of public elective offices such as MP, MLA and MLC, honorary office leadership of charitable, educational or other non-commercial organizations, acting as notary public, justice of peace, special executive magistrate, and part-time tutorship under the coaching organization of institute, valuation of papers, editorship of professional journals, acting as surveyor, acting as recovery consultant, owning agricultural land and carrying out agricultural activity. Okay, for all these activities general permission has been given by the council. Next, specific resolution. For these activities you need to take specific permission from the council. What are they? Full-time or part-time employment in business concerns, provided that a member or his relatives do not hold substantial interest. Okay, if you want to involve in full-time or part-time employment, you need to take specific permission from the council. Full-time or part-time employment in non-business concerns like charitable concerns. Next, office of managing director or whole-time director of body corporate within the meaning of Companies Act 1956. Okay, if you want to act as MD or WTD being in practice, you have to take specific permission from the council. Interest in family business concerns, you have to take specific permission. Interest in educational institution, part-time or full-time lectureship for courses other than those related to institute, part-time or full-time tutorship under any educational institute other than coaching organization of institute, editorship of journals other than professional journals, any other business or occupation for which executive committee considers that permission may be granted. Okay, in those cases you need to take specific permission from the council. Those were all the 12 clauses from part 1 schedule 1. Moving to part 2. which are professional misconduct of chartered accountant in service. Here clause 1 deals with pays or allows or agrees to pay directly or indirectly to any person any share in the emoluments of the employment undertaken by him. Okay, a chartered accountant is working as an employee, okay, and he is receiving some salary or emoluments. Now he should not share the amount of salary or amount of emoluments received by him with any other person. Hope this is clear. Next, clause number 2. In the first clause, he should not give share of his emoluments. In the second clause, he should not accept share of emoluments of other people. Let us see. Accepts or agrees to accept any part of fees, profits or gains from a lawyer, a chartered accountant or broker engaged by such company, firm or person or agent or customer of such company, firm or person by way of commission or gratification. Okay, a chartered accountant who is in employment of a particular company should not accept any commission from lawyer who is employed by such company, or a chartered accountant who is appointed by such company, or a broker engaged by such company, or any firm or person or agent or customer of such company. Hope this is clear. That is part 2. Moving to the part 3, which are applicable to both CA in practice as well as CA in service. First clause, not being a fellow of institute acts as fellow of institute. Okay, a chartered accountant is ACA but he uses FCA, then he will be deemed to be guilty of professional misconduct. Next, clause 2, does not supply information called for or does not comply with the requirements asked for by the institute, council or any of its committee, director discipline, board of discipline, disciplinary committee, quality review board or appellate authority. Okay, whenever any information is asked by these people and the CA does not respond to the request made by these people, then he will be deemed to be guilty of professional misconduct. Next, while inviting professional work from another chartered accountant, or while responding to tenders or inquiries, or while advertising through write-up or anything as provided for in item 6 and 7 of part 1 of the schedule, gives information knowing it to be false. Okay, if he gives false information, then he will be deemed to be guilty of professional misconduct under clause 3 part 3 of schedule 1. Okay, by this part 3 has been completed. Moving to the last part, which deals with other misconduct. First clause, is held guilty by civil or criminal court for an offence which is punishable with imprisonment for a term not exceeding 6 months. Okay, if he is punished with imprisonment for a term not exceeding 6 months, then he will be guilty under schedule 1 part 4 clause 1. In case the term is exceeding 6 months, then he will be guilty under schedule 2 part 3 clause 1. Hope this is clear. Next, clause 2, in the opinion of council, brings disrepute to the profession or institute as a result of his action, whether or not related to his professional work. Okay, if any chartered accountant performs any activity which brings disrepute to the institute or the profession, then he will be guilty of other misconduct. Okay, by this schedule 1 has been completed. We will discuss schedule 2 in the next class. Okay, bye bye. Now we will be moving to second schedule. In this second schedule, all the misconducts will be such that client will be affected. Okay, in the first schedule, due to the misconducts of the auditor, client will not be affected. Okay, we have seen all the administrative related misconducts in first schedule. Now in the second schedule, misconducts during the audit. Okay, here due to this work of the auditor, client will be affected. Those types of misconducts will be covering under second schedule. Okay, in the second schedule we are having 3 parts. Under first part we will be having 10 clauses. Okay, which will be dealing with professional misconduct of CA in practice. Hope this is clear. Now I will be starting with the first clause. Clause number 1. Basically what clause number 1 deals with is confidentiality. Now auditor, while performing the audit, will be having access to the information of the client. Now this information which the auditor has got should not be disclosed to any third party unless permitted by the client or there is any legal requirement. Hope this is clear. That will be dealt by first clause. See, discloses information acquired in the course of his professional engagement to any person other than his client so as engaging him without consent of the client. That means with the consent of the client you can disclose the information to third party, or otherwise than as required by any law for the time being in force. Okay, if the law requires you to disclose the information, then you can disclose the information. Next, now here you need to differentiate between information of the client and working papers of the auditor. Both are not one and same. Okay, information of the client has to be kept confidential. It should be disclosed to third party only after taking consent of the client. But coming to working papers, auditor is owner of this working papers. Okay, he need not give these working papers to others. Okay, at his discretion he may give them, but there is no mandatory requirement to share his working papers with others. Hope this is clear. Now this first clause speaks about client information but not auditor's working papers. Hope this is clear. Moving to clause number 2. Basically clause number 2 deals with auditor certifying financial statements without verifying them. Okay, auditor will be deemed to be guilty of professional misconduct if he certifies without properly verifying them. Hope this is clear. Let us see. Certifies or submits in his name or in the name of his firm a report of an examination of financial statement unless the examination of such statements and related records has been made by him. Okay, either he should examine those records or by a partner or an employee in his firm. Okay, if he has not examined, at least his partner or his employee might should examine the financial statements, or by any other chartered accountant in practice. Hope this is clear. First of all, before signing the financial statements, those financial statements must be verified by either himself or his partner or employee or another CA in practice. Hope this is clear. Now once clause 2 is affected, you can also link this clause 2 to clause 7 and clause 8. Basically clause 7 will be dealing with gross negligence and clause 8 will be dealing with not obtaining sufficient appropriate audit evidence. Okay, if the auditor signs the financial statements without properly verifying them, then it is the clear case of not exercising due care. Thereby auditor will be guilty of gross negligence while performing his duty. And also if he doesn't verify the financial statements before signing, it is deemed that he has not obtained sufficient appropriate audit evidence. Okay, thereby even clause 8 will get affected. Hope this is clear. Clause 2 you can link it with clause 7 and clause 8 of same part 1 schedule 2. Hope this is clear. Next, clause 3. Basically clause 3 deals with projections, estimation of earnings. Basically auditor can give his can certify projected financial statements. There is no prohibition on certifying the projected financial statements, but he should not give he should not use words which will give an implication to the third party that auditor vouches for the correctness of these projections. See, let us read it. Permits his name or the name of his firm to be used in connection with an estimate of earnings contingent upon future transaction in a manner which may lead to belief that he vouches for the accuracy of the forecast. See, forecast will not be accurate. Okay, forecast will never be accurate. No one can accurately project the financials. Thereby auditor should not use any terms in his report that will make the users of those statements to believe that auditor has vouched for the accuracy of the those projected financial statements. Hope this is clear. And also in his report he should indicate clearly in his report the sources of information, basis of forecast, and also the major assumptions made in arriving at these forecasts. Okay, in his report on this forecast he should mention these three things. Hope that is clear. Moving to clause number 4. Now if auditor is having substantial interest in any entity, he should not conduct audit of such entity. Okay, if he conducts audit of such entity in which he is substantially interested, he will be deemed to be guilty of professional misconduct under clause 1 part 1 under clause 4 part 1 schedule 2. Okay, let us see. Expresses his opinion on financial statements of any business or enterprise in which his firm or a partner in his firm has substantial interest. Hope this is clear. Now here financial statements includes both reports and certificates issued, and members not to write books of accounts for the auditee clients. Okay, if member is conducting audit of particular client, member should not prepare books of accounts of those particular client. Next, statutory auditor should not be internal auditor simultaneously. Okay, for an entity both the statutory auditor and internal auditor should not be same person, and also internal auditor not to be tax auditor of the entity simultaneously. Same auditor cannot act as internal auditor as well as tax auditor of an entity, and internal auditor not to be GST auditor simultaneously. Hope this is clear. Moving to clause number 5. See, clause number 5 and clause number 6 are somewhat similar. Okay, clause number 5 deals with financial statements, whereas clause number 6 deals with audit report. This is the difference between clause 5 and clause 6. Let us see. Clause 5. Fails to material fact known to him which is not disclosed in financial statements. Okay, there is a particular material fact that has to be disclosed in the financial statements, but the same is not disclosed, and auditor knows that such a disclosure of financial statement is necessary in the financial statements even though such a disclosure is not made. In that case, auditor will be deemed to be guilty of professional misconduct as per clause 5 part 1 schedule 2. But a disclosure of which is necessary in making such financial statements where he is concerned with that financial statement in a professional capacity. Hope this is clear. Clause 5 deals with financial statements. Moving to clause 6. Clause 6 deals with audit report. There are certain misstatements in the financial statements. If there are misstatements in the financial statements, auditor needs to report the same in his audit report, but he fails to report the same in his audit report. In that case, he will be deemed to be guilty of professional misconduct. See, fails to report a material misstatement known to him to appear in a financial statement with which he is concerned in a professional capacity. Hope this is clear. Next, clause number 7. Remaining clause 7, clause 8, clause 9, clause 10. These are very simple clauses. Let us see. Basically, clause number 7, which we have already discussed while discussing clause number 3, which deals with gross negligence. Does not exercise due diligence or is grossly negligent in conduct of his professional duties. Next, clause number 8. Fails to obtain sufficient information which is necessary for the expression of an opinion or its exception or sufficiency material to negate the expression of an opinion. Okay, fails to obtain sufficient appropriate audit evidence. These two clauses I guess we have discussed while discussing clause number 2. Yeah. Next, moving to clause number 9. Now, basically, auditor has to conduct his audit in accordance with generally accepted auditing principles. Now, in India, auditor needs to conduct his audit as per auditing standards issued by our institute. Now, in case if he fails to conduct the audit in accordance with auditing standards, he needs to disclose why there is departure from those auditing standards. Okay, if he fails to disclose the same, then he will be deemed to be guilty of professional misconduct under clause 9. See, fails to invite attention to any material departure from generally accepted procedure of audit applicable to the circumstances, that is auditing standards. If he fails to comply with the auditing standards, he needs to disclose why there is a departure from the auditing standards. In case he fails to disclose the departure, then he will be deemed to be guilty of professional misconduct. Next, clause number 10. Now, when auditor receives any money from the client, okay, for paying any taxes, okay, or for incurring any expenses on behalf of client, such amount must be deposited in a separate bank account, okay, till the amount is spent, and such amount must be spent only for the purpose for which you have received that amount from the client. Okay, if the auditor fails to do so, then auditor will be deemed to be guilty of professional misconduct under clause number 10. See, fails to keep money of his client other than fees or remuneration or money meant to be expended in a separate bank account, or to use such money for the purposes for which they are intended within a reasonable time. Okay, if client has given the amount to pay the taxes, then you have to use that amount only for paying taxes, and you need to use it within the prescribed time, okay, within the due dates. Hope this is clear. That is part 1 of schedule 2, which deals with professional misconduct of CA in practice. Now moving to part 2. Part 2 is applicable to both CA in practice as well as CA in service. Okay, we can call it as members in general, professional misconduct of members in general. Let us see, professional misconduct in relation to member of institute generally. Here we will be having 4 clauses. Clause number 1. Contravenes any of the provisions of this act or regulations made thereunder, or any guidelines issued by the council. Okay, very simple clause. Clause 2. Now, clause 2 deals with confidentiality related to CA in practice as well as CA in employee. Okay, in part 1 we have discussed similar clause relating to confidentiality. Okay, that is clause 1 of part 1 of schedule 2, which deals with confidentiality for CA in practice. Now clause 2 part 2 schedule 2 deals with confidentiality for both CA in practice as well as CA in member. Okay, member in general. See, being an employee of a company, firm or person discloses confidential information acquired in the course of his employment, except as and when required by any law for the time being in force, or accept as permitted by employer. Hope this is clear, which is related to confidentiality. Next, clause 3 deals with submitting false information to the institute. Let us see. Includes any information, statement, written or form to be submitted to the institute, council or any of its committee, director discipline, board of discipline, disciplinary committee, quality review board or the appellate tribunal, any particulars knowing them to be false. Okay, if you submit any false information to the request received from the institute, then you will be deemed to be guilty of professional misconduct as per clause 3 part 2 schedule 2. Next, clause number 4. Okay, clause number 4 is similar to that of clause number 10 of part 1 of schedule 2. Okay, which deals with using the amount. Okay, clause 10, the when auditor receives any amount from the client for incurring any expenses on behalf of client, he should use them only for those purposes for which amount is received. Now clause 4 deals with defalcates or embezzles money received in his professional capacity. Okay, if a CA receives any amount in his professional capacity, he should not use it for his own purposes. Okay, he should spend it for the purposes for which it is received. Hope this is clear. Next, part 3, other misconduct in relation to member of institute. A member of institute, whether in practice or not, shall be deemed to be guilty of other misconduct if he is guilty by any civil or criminal court for an offence which is punishable with imprisonment for a term exceeding 6 months. Okay, if it is for a term less than or equal to 6 months, then he will be guilty under schedule 1. Okay, if the term is more than 6 months, then he will be guilty under schedule 2. Hope this is clear. Next, moving to the council guidelines. See, some of the guidelines I have covered along with schedules. Here I will be discussing balance leftover guidelines. First of all, maintenance of books of accounts. Every CI, CI in practice and every CFM must maintain requisite books of accounts along with cash book and ledger. Okay. Tax audit assignment. Each CI in practice can conduct maximum of 60 tax audits. Okay. Each CI in practice will be having maximum of 60 tax audits. And in case of partnership firm, each partner of the firm will be eligible to conduct 60 tax audits. And in case any partner is partner in 2 or more firms, then on behalf of such partner, all those firms will be together eligible for 60 audits only. Okay, let's say there is Mr. A. Okay, CAA. Now he is partner in firm 1 and firm 2. Now on behalf of Mr. A, firm 1 and firm 2 together will be eligible for 60 audits only. Hope this is clear. And in case Mr. A in his individual capacity has conducted any tax audits, let's say in his individual capacity he has conducted 10 tax audits in his individual capacity. In that case, from the 60 that is from the limit of 60 that is available to both the firms, together 10 will be reduced and only balance 50 will be available. Hope this is clear. Next, moving to the statutory audits. In case of statutory audit of a company, each partner will be eligible for 30 audits. Okay, 30 audit assignments. Even this audit assignments, 30 audit assignment calculation is similar to that of this calculation. Hope this is clear. Next, appointment of an auditor when he is indebted to a concern. Okay, if a person is indebted for more than 1 lakh rupees, then he cannot be appointed as auditor of that concern as per institute guidelines. Next, guidelines for corporate form of practice. Generally, practice cannot be conducted by corporate form. Okay, you cannot incorporate a company for conducting practice. Okay, for conducting auditing of other entities. However, you can conduct consultancy activities. Okay, by incorporating a company. See, member in practice is allowed to hold office of managing director, whole-time director, manager of a body corporate within the meaning of Companies Act, provided that the body corporate is engaged exclusively in rendering management consultancy and other services permitted by the council. Okay, but not auditing services. Hope this is clear. If the company is not providing audit services, then you can incorporate the company. Okay, if you don't want to provide audit services, then you can incorporate the practice in the form of a company, and you can also act as managing director or whole-time director or manager of such a company which is providing only consultancy services. Hope this is clear. See, here you can see in the note, it may be clarified that no audit practice can be conducted in corporate form. Okay, those were the guidelines, and still we have network guidelines. Okay, guidelines related to networking. Now under networking, 2 or more audit firms will come together and will form as a network. Okay, in order to increase their economies of scale. Okay, in order to serve the clients more better. Okay, now see, 2 or more firms join together to form a network. What will be the characteristics of a network? They will be having common brand name and quality control systems. Okay, they will be having same brand name and same quality control systems. Here you can take example of Big Fours. Okay, next, sharing of professional resources, sharing of profit and cost, common ownership and control, common business strategy. Okay, these are some of the characteristics of networks. And a network can be, network form of practice can be conducted by incorporating either a partnership firm, LLP, or a company, or any mutual entity. And there are some of the important points. One firm can join only one network. Okay, let's say there is a firm, there is A and Co, a partnership firm, okay, and B and Co, and C and Co. Now these three firms together formed a network. Let's say ABC and affiliates. This is their network. Now here there are other firms, D and Co, E and Co. Now A and Co, which is member of A and B affiliates, cannot again be member of another affiliate. Okay, DA and affiliate, this is not permitted. Okay, one firm can be member of only one network. Hope this is clear. And in case firms having common partners shall join only one network. Now let's say here A and Co is there now. In A and Co there is Mr. A, who is a partner of A and Co, and also Mr. A is also partner of D and Co. Okay, Mr. A is partner of D and Co as well as A and Co. Now in this case, since A and Co is part of ABC affiliates, in case D and Co also wants to enter into any network, it should enter only into ABC and affiliates. Okay, it cannot enter into a new network firm. Okay, a new network. Hope this is clear. Since A and Co and D and Co are having a common partner. Hope this is clear. Next, network name should be distinguished from firm name and approved by institute. Okay, the network name should be different from that of the firm name, and also the name of the network should be approved by the institute. Okay, you should make application to the institute for approval of your network name, and you should use the words and affiliates, okay, as a suffix to the name of your network. You should use the term and affiliates. Hope this is clear. And institute within 30 days will either approve or reject your request for name approval, and request for name approval has to be made in form number A. Hope this is clear. After name is approved, network shall register with the institute by applying in form B within 3 months. Okay, once the name has been approved, with this name you can incorporate either a firm or a company or LLP, and such incorporated entity should be again registered with the institute by making application in form number B within 3 months of name approval. Hope this is clear. And in case there is any change in the constitution of network, okay, in case any member is going out of the network, or any new member is being added to the network, in that case you should file an application with institute in form number C within 30 days of such a change in the constitution. Hope this is clear. These are some of the important points related to networking. And moving to recommendatory self-regulatory measures. Okay, these regulatory measures are not mandatory in nature, they are just recommendatory in nature. What are these related to? First of all, related to branch audits. Now the branch audits of a company should not be conducted by its statutory auditors consisting of 10 or more members, but should be conducted by local firms of auditors consisting of less than 10 members. Now there is a head office, okay, there is a big entity. Now this entity is having various branches. Now the audit of this particular entity is being conducted by a particular audit firm which is having more than 10 partners. Now in this case, this audit firm should not conduct a audit of branches. Okay, instead this audit firm should encourage to conduct the audit of those branches of this entity by some local audit firms which are having less than 10 members as partners. Hope this is clear. This is however not mandatory, it is just a recommendatory. Hope this is clear, in order to encourage smaller firms. Hope this is clear. Next, joint audit. In case of large companies, practice of associating a practicing firm with less than 5 members as joint auditors should be encouraged. Okay, and where a client decides to appoint such a firm as joint auditor, senior firm should not object to the same. Hope this is clear. That is related to joint audit. Next, ratio between qualified and unqualified staff. There should be at least 1 qualified staff for every 5 unqualified staff. Hope this is clear. See, at least 1 member for every 5 non-qualified members of staff, excluding article and audit assistant, typists, pews and other persons not engaged directly in professional work. Hope this is clear. For every 5 non-qualified staff, okay, who are involved in professional work, there should be at least 1 CA member, you can say, or qualified staff. There should be at least 1 CA member. Hope this is clear. By this, revision of professional ethics has been completed. Okay.